So question 2 is actually, I think, the easiest question to get a lot of marks. If I were the one to answer and have to go into the exam, I would start with question 2. Because question 2 has got my cash flow, which is straightforward calculations. And they will also have, so it will be your cash flow, and it will be ratios to do. They won't ask comments in this section. I've never come across them asking comments. And if they do ask comments, you'll know how to answer it because you prepared for it for question 3. But at this stage, your question 2 is more ratios that they say, calculate this, calculate that, calculate this, calculate that. And you have to be able to do it. And please, guys, this format sheet, please, this is only if you forget to go quickly see, oh yeah, this one is at the bottom, this one is at the top, because we get confused. This thing, you don't use it. You have to know your ratios, because this thing is very confusing. I would suggest go back to your WhatsApp videos that I sent about how to divide this. But I would say just pretend like you never even got it, and just when you are unsure if which one goes to the top or the bottom, then you quickly go check. Okay. Now if I look here, your cash flow, please, they catch you if they ask you note 1. Because you guys always think, oh, they're going to ask the tax, they're going to ask the dividends. Which, yes, 9 out of 10 times they do. And the fixed assets. Those ones is the easy ones for us at this stage. Now they ask you note 1, and suddenly you can't remember how to do the increase, decrease, inventory, increase, decrease, receivables. So please go look at your notes. The same goes with the change in cash. Make sure you know it. Okay. So I'm just quickly going to go through. If I do note 1, note 1 is my net profit before tax. So once again, they can do the UK thing, where they give you the tax and you have to work it back. Okay. So this is the 100% that we want. Now, net profit before tax, add depreciation, add interest expense. If they throw in an interest income, what are you going to do? You're just going to subtract it. Remember, if you do this thing with the income, you do that thing with the expense. And that's something you need to know. You just always do the opposite with the two. Okay. So now you get there. What is this called? This is called your profit generated before working capital. Now you guys have to know these terms. I know it's things they don't use in the textbooks and stuff, so I'm going to quickly just write it down for you again. Working capital. Your working capital is literally current assets less current liabilities. So when they talk working capital, they are referring to your currents. Number 1. When it's in a ratio situation, they are referring to your liquidity ratios. Okay. Especially your current assets, current liabilities, asset test. Okay. Then the other one is your capital employed. When they talk capital employed, it's your capital that's working for you. You always got two capitals that's working for you. Your shareholders' equity and your loan. Your own capital, your own funds, your borrowed funds. Your shareholders' equity is most the ordinary share capital and the retained income. Please be aware of these two ways that they talk. Okay. So now if I go back here, now they have the working capital things. Right. Now, the working capital things is an increase, decrease inventory, increase, decrease receivables, increase, decrease payables. Now, do the arrows, do the brackets, because you get 3 ticks if it's right, nothing if the bracket is wrong. Please have your brackets right. So now how do I do that? For me, can you see once again, these two are assets and this is a liability. So obviously their brackets is going to be opposite. So the easiest for me to remember is if I buy stock, what happens to my cash? There's an outflow. So the increase in stock makes it more. So obviously the two assets will work together and the liability opposite. That's how I remember it. The second thing you need to remember here is you're not allowed to take SARS, income tax, and shareholders for dividends. Those two, and of course bank overdraft, but yeah, it doesn't come in play here. But those two you do not take into consideration. Okay. So, in other words, if they were to give you, for instance, they will say this is 23 and this is 24, and they tell you you have debtors 10 Rand and 12 Rand, accrued income 12 and 13, prepaid expense 3 and 2, and then they say to you, you have SARS here 7, and what are you going to do? So now I'm going to add those ones. Can you see I'm going to ignore SARS? Those ones is going to be 25. Those ones are going to be 27. Can you see I'm ignoring the 7? And now I see, oh, it's a decrease of 2. A decrease is positive. Okay. Sometimes they are even spiteful with the payables. They will put bank overdraft in there as well. So, and short-term loan. You don't go to those things. You go look at your most basic. So if it's creditors, you want to look at your accrued expense, your prepaid, your income received in advance, and all your salary stuff. That's all. You're not going to look at shareholders for dividends, such short-term loan or bank overdraft. You're not going to look at that. Okay. So that's the big thing where you guys tend to, yeah. Next thing, if I go look at how to calculate, the first thing is, please, your brackets. With this thing, they are ruthless with brackets. You lose marks if your brackets are not right. So the moment you know there's an outflow of cash, in other words, if they use the words paid, there's a bracket. Okay? Now, if I do dividends paid, now remember, if I do shareholders for dividends, how does it work? I have an opening balance and then I pay it. I have an interim and then I pay it. I have a final and then I balance it. That's going to be my closing balance. Next year, opening. Okay, you see, that's why your final goes into the balance sheet as a liability. Okay. Yeah. So, in the end, what am I looking for? I'm doing the cash flow. So, cash flow equals bank. Can you see which is the two that I pay? The opening balance and the interim. So, if I go look at a question, let's see what they give me here. And they give me an extract here. And I go look at my dividends. First thing, if you look here, shareholders for dividends. can you see, this is my opening and this is my closing. And by the way, my closing is my final. Okay? So, can you see, already I got the 65,000, the opening. Now I just need to find the interim. So where do they tell me about the interim? Either extra information, usually under ordinary share capital. You guys use your headings, ne? So, capital or dividends. And now they say they paid interim dividends. Ne? Now can you see they don't give you the interim dividend. So you can do it one of two ways. What would be the first way here? You can go calculate it. But now look at the dates. Remember, you've got a timeline. 1st of March, 28th Feb. When is the interim declared? 30 September. And you know, you're going to times it with 5 cents. So how many shares do you have 30 September? So now I go to the capital. I see 1st of March, we start with 2.5 million. 15 May, 15 May, which is before the interim, we issue a further million. We repurchase January here. So can you see, by the 30th of September, I've got 3.5 million. So I will say 3.5 million times 5 cents. Right. Another way to do it is, I know in this case, interim plus final gives me total. Now, what do I have? If I look here, they gave me final because they gave me the closing. And they gave me total. So if I say the 490 less the 315, I will also get my interim, which is what? 490, 315 is 175. So that 175 I add to the 65 and I get how much I paid. Or I can go do the T. Because what did they give me? They gave me the opening 65. They gave me the closing 315. They gave me not the interim and final separate, but they gave me the total. Can you see there? The total is 490. And then I'm going to balance on one bank. And it's going to be the same as when I calculated this way. Is everybody sharp? And please remember to go put it in brackets, and please remember to show your calculation. Don't not show calculations. That is your biggest problem. Okay. Now, Sash, my good old friend, jumps, because I can have an opening and I can have a closing. Can be either sides, but your bank and your tax are always on the same sides. That doesn't change. So the first thing you always go to is because this is now your trick, ne? Because if you look in your face where it says tax paid, ne? You're going to put in brackets, and it's going to be an opening, and it's going to be a tax, and it's going to be a closing. So the moment I can write down my income tax, and I plus or minus my opening or my closing, I already got that tick, and if I have my bracket, that tick. You see? So now let's go get those ticks. So the first thing I want is I want my tax. So tax you will always find in your income statement. Okay? So your income statement, they give me the tax. 358, 440. Okay. Now, these guys here, can be troublesome. So this is why I will always remember the following. Receivable and payable, receivable and payable. Receivable being a current asset. Payable being a current liability. Receivable meaning it's a debit. Payable meaning the balance is a credit. Okay. So, let's go look. With this one I want to show figures because it's just easier. So if I go look here at SARS, can you see both of these amounts for SARS is under the heading for current liabilities? Ne? So both of them are payables. So the opening is a payable and the closing is a payable. And then I just balance. Okay. Okay. There was something else I wanted to say, but I cannot remember. So life goes on. What is it that I wanted? But please, guys, with SARS, you have to get it right by now. Just go practice it over and over again. Okay. The next thing that we have T's for is your fixed assets. So fixed assets at carry value, it's the opening and the closing. What I buy, asset disposal, depreciation. Okay? Now, everything that I use here must be carry value. Okay? If they give you cost price, then you don't have to use the depreciation. Okay? But most of the times, they give you an extract from the balance sheet. Can you see in this exercise here, they didn't tell you which is the income statement balance sheet. They say comprehensive income, financial position. Because you have to actually know that this is the income statement, this is the balance sheet. So don't expect them to be kind and to put in brackets income statement balance sheet. Okay. So they will usually give you the balance sheet. And if they give you the balance sheet, you know, if they give you fixed assets, those fixed assets is carry value. Okay. So did they give that to me? No. I don't think in this question. Oh yeah, here it is. Fixed assets. There's absolutely nothing here fixed assets, but they give me a note where they say a new vehicle was bought. So they already give you the purchases, ne? And they give you the purchases. Can you see? You just add those two. So in this case, what did they do? They gave me the purchases, right? Where did they give me the... Did they give me anything else? Okay, I don't have the answer sheet. Let's quickly look at the answer sheet, what they gave me there. Answer sheet, they didn't ask me fixed assets. No, they did. They only asked me what I bought. And it was given straightforward. Okay. You guys shop? Okay. So, the thing here is they will literally most of the time, no, not in this exercise, but they will give you an opening and they'll give you a closing. And then they can ask any one of these three to be calculated. Meaning, if they give me the asset disposal and the depreciation, they want me to calculate what was bought. If they give me the buying and the depreciation, I can calculate the asset disposal, which is the amount that goes into the face, ne? Because in your face it will say buy fixed assets, sell fixed assets. And that sell fixed assets is the carry value of the asset disposal. I'm sorry, babies. Okay. If they give me the asset disposal and the buying, I can calculate the depreciation for note 1. Okay. Sharp. So be aware that you can do a lot of things with this T account. Okay. The next one, is the fixed deposit. So if the fixed deposit increases, it's negative. It works the same way. Remember when we did this note? Can you see every time the assets, if the asset increase, it's an outflow of cash. Okay? Same here. And if you go to the financing, if you look at the loan, if it increases, it's positive. It works the same way as note 1. Okay. So, there was some, you know, I keep thinking I want to say something, and then it leaves my head before I do. This is what I want to say. Please, guys, be very careful. Investing is your F's. This is your non-current assets. Okay? So it's buy fixed assets, sell fixed assets, increase, decrease, fixed deposit. Financing, is your, where did I get the money from to do the business? And this would be the issue shares, the repurchase shares, and the loan. Okay, just make very sure. You guys fall into that trap a lot of times when they ask you to do the financing activities and then you go do the investing. Or do the investing activities and then you go do the financing. So please, please, this is the one place where they catch you. When I look at the financing, while we're there, the issue shares, you literally go and you look at the information they give about shares, where they tell you 1 million shares was issued by the directors. So they want the rand value of that million. Now can you see they're spiteful, they don't give it to you. So what are you going to do? You have to do your note for ordinary share capital. And can I quickly show you a little trick? What you do, you make this your note. So you say, okay, in the beginning I had 2.5 million shares, right? And the opening balance was what? Now my papers are getting confused. So I see here it was 9.7, right? Then I see, okay, 1 million shares were issued, I don't know how much, repurchase 1.5 million, and, oh no, they don't say how much. They say it's repurchased at 1.5 million. Now be very careful, this is the total price I paid for it. This isn't the average. So, but, what am I busy with? I'm busy with the cash flow. And I'm busy with the cash flow, so that 1.5 million, if I go to this guy, the repurchase, it would be 1.5 million, because this is the average and the above average. Right? You see? Okay, so now let's go back. They don't tell me anything else. They say 28 February, we have 3.2 million shares. Right? And I go, look, what is my closing? And they tell me it's 13,440. Now what can I do? I can go calculate the amount of shares that was repurchased by reversing. Okay, you guys with me? Once I can do that, I can calculate, let's quickly see, because there has to be, in the end, I'm going to balance on that 1 million there. You guys fine? Yes. Okay, and that 1 million there would be the one that I need for the issue. It would be the 1 million times whatever, that goes there. But can you guys see, we now have a little problem, because we need to get the average price here in order to balance on that one. Okay. Do you want me to go into that, or are we going to leave it? You're going to do it on your own? And then you can come ask me Monday if you have a problem. Okay, but you can see now what you're going to do is you do this quickly on the page because they already written everything for you. Now when I go and I write my answer down here, I just say the 9.7 less plus the 13,440 plus the repurchase. Then I just rewrite that because the marker will not be able to see this. So she won't be able to give you part marks. So you need to go put that column here again. Okay. This is just making your life easier to calculate it before you transfer it. Is everybody sharp? Okay. Then the other thing is the cash. Cash, very straightforward. Change, opening, closing. Ne? I have seen in the past few papers they draw this line in the wrong place. Okay? So take a highlighter, go draw your line where it's supposed to be, that you don't get confused. Because the change and the opening gives you the closing. Okay, not the opening and the closing gives you the change. Okay? And then you reverse. When possible, you always reverse. Other thing you need to remember, you always take your cash and cash equivalents and your bank overdraft. Always, you go check for both. So if I look at my question, which I once again lost, can you see here, for instance, they didn't give you the overdraft, so there will somewhere be in the question a way for you to calculate it. But there obviously is an overdraft because they gave a question mark. Okay? So there should be a way for you to calculate your overdraft. And now, the overdraft and the cash equivalents, can you see there's no cash equivalents? But if there was, I would do a little sum of those two. Just as I do a little sum of those two for the opening. Okay. You guys still with me? So if you look here, you will see they just ask certain calculations of the cash flow, ne? And here they ask financing activities, which is the capital and the loan, ne? Okay. Then they want the cash and cash equivalents, which is the change, opening, cash, closing, okay? And then they ask me to calculate ratios. And remember, the word on, ne, refers to divide. The dividing ratio also refers to divide. The word per also refers to divide. Okay. Go look at your ratios. If you have a problem calculating these ratios, come to me.